Hey John, this is Ryan with Trend Lizard. Thanks for the email. I'm going to do an analysis of MOO for you, the Market Vectors Agribusiness ETF. I can see why you like this guy. This is a really interesting ETF. A lot of stuff going on. In fact, you have to go back to its inception in 2007 to get a really good perspective on what's going on. So that's what we're going to do. We're going to start in the long term and kind of work our way in to develop a game plan for how you might want to trade this guy. So here's the long-term chart of Moo. Its inception was in 2007. It tanked in 2008 alongside the rest of the market, but since then it's all been pretty constructive price action. You can see a nice five-wave advance off the 2008 low into the 2011 high. Since then, there hasn't been a ton of excitement for this guy. It's been in a huge sideways corrective pattern. It's getting a little more interesting in 2015 with this decline that's emerged off the 2015 high. But from a long-term perspective, a very long-term perspective, the trend is up. Over the last several years, it's been more sideways and not so many opportunities, but I think that is changing right now. So it looks like what's happened is MOO has entered into a C-wave decline, which is the sharpest decline of any counter trend move, at least normally it is. So the prospects are pretty good that this guy's heading lower in the midterm. But let's zoom in a little bit more to focus in on what's going on. So here is the 2015 down leg. I've got a bunch of labels on this guy, which basically just means that it's in a big trendy down move off of the 2015 high. It's a big five-wave decline, which indicates that it is a trendy move. So this looks like the start of a larger down move in 2015. Currently, it is in a recovery off September's low, and that recovery is likely not done. It's probably going to keep going into this yellow area. But as long as that recovery stays below 53, we're going to be looking for a larger decline to form off the 2015 high. So once this recovery completes, this looks like a pretty good short opportunity for you. You can start with a stop level at 53 and then probably trail it as the decline develops from there. So if we look back at the long-term chart, pretty good target for this decline is somewhere around the 2011 low, which is at about 37.50. Really, we're just looking for some kind of test of this yellow area, but 37.50 is kind of a good ballpark target for you. So in the very long term, the trend is up. In the last several years, it's just been sideways. Midterm trend looks like it's developing into a down move, but then again, the near-term bounce is likely to continue for now. So hopefully that gives you some ideas on how to trade this guy going forward. Thanks for being part of our Trend Lizard community, John, and look forward to talking to you again soon.